And welcome back to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, we're doing a coin review. And this is a coin that everybody knows about in this space. It's Bitcoin. But it's a video I did a while back, and I wanted to retouch on it. And I'm retouching on a lot of videos to get them re-released after Altcoinopoly, because now I can actually label them and share them to everyone. Bitcoin was reviewed a few months ago. It's still a 5 out of 5 in my chart. Obviously, it's the #1 coin in the space. It's the Kleenex or the Xerox of the crypto world. The #1 name brand. Bitcoin is synonymous with crypto. It's about half the market, and it shows no signs of slowing down. So what are my thoughts on it? How do I chart it? I'm going to add a little bit more content on charting today, and then we'll do a quick review at the end. Just a quick reminder that nothing in this video is considered financial advice. I am not your financial advisor. This is not financial advice. Seek out your own advice and do your own diligence, do your own research. So Bitcoin had to be discussed as one of the coins here. It just had to be. It's a top 30 coin for sure in any portfolio, but the news is going to be handled a little bit differently for this video. It's just, if you don't know what Bitcoin is by this point and you're watching cryptocurrency videos, hopefully you can find other, there's a billion videos out there to explain what Bitcoin is about. Here's just one example. Bitcoin was launched in 2009. It's been around for 12 years. It reduces its supply every 4 years. It's created by miners that are doing proof of work. So, and there's only ever going to be 21 million coins. And that was discussed. The reason I'm discussing Bitcoin right now is because the conference going on. That's one of the reasons I thought it's a good time to talk about it. Also, some of the other coins I want to talk about as well. But the timing is pretty good. Now, Bitcoin, right now in Miami, the largest Bitcoin conference in history is going on right now. Ticket prices notwithstanding, there's been a lot of people that are there, both June 4th and 5th this weekend, talking about Bitcoin. You have Michael Saylor, you have Max Kaiser, you name the person, they're probably there. I'd say 2/3 of at least a half of the influencers are there. A lot of the bigger names in Bitcoin are there. But Bitcoin is being talked about a lot, which is good for the industry that we're talking about Bitcoin, Elon Musk notwithstanding. And it's important that we talk about Bitcoin and where it is in the marketplace. So Bitcoin has been the #1 coin for a while. It's the only asset. The Winklevoss twins also gave a nice interview, and they dropped a few very important points when they were talking to Anthony Pompliano, otherwise known as Pomp. This is the only asset, they call it an asset class, but this is the only asset that's out there that we know exactly how much there's ever going to be. You cannot say that about anything, including gold. They could find gold somewhere else. They could find it on Mars, on the moon, on an asteroid, in a mountain in Africa that they don't let people go and get. I'll let you find that story. And then you don't know how much gold there is in the world. So if you find more gold, supply and demand. So more supply, less demand, price should go down. Bitcoin, we know what the supply is. We know it specifically, and we'll talk about that in a moment, but it's the only asset that we know that's completely fixed on the amount that's ever going to be, and as demand goes up, price will go up because supply is fixed. Basic economics there. Now, a lot of people talk about Bitcoin dominance, and here's a chart from TradingView. Bitcoin, for the most part, has always been in the high 60s to 70 range, except for the last few months. And while everybody is talking about the recent tumble in the Bitcoin price from the 60s down to the 30s, what's really happening and what people need to take note of is that the altcoins are actually doing better against Bitcoin overall in the last couple of months. Bitcoin dominance has dropped below 50% and may stay there for a while, which is a strong sign of alt season happening, or altcoin season. So another reason why you want to have Bitcoin in your portfolio is to keep track, because not only do you want to stack your sats somewhere, but you also want to keep a pulse on what Bitcoin's doing versus the rest of the altcoins. So turning your eyes away from the altcoin dominance for a moment, we talk about the production rate of Bitcoin. Every 4 years, supply gets cut in half. Here's a rack of miners, for example, that are mining Bitcoin, which is how it gets done by proof of work. But I'm going to blow up this particular image right here, which shows the inflation rate of Bitcoin versus time. Since every 4 years, you cut the inflation rate, and it goes down and down and down. As we get to 2021, we had another halvening. Actually happened in 2020, I believe. And then the supply of Bitcoin gets closer and closer to its ultimate supply. We're nearing 90% of all the Bitcoin that's ever been produced have already been mined. As supply starts to trickle down and the halving rates get cut in half every 4 years, there's going to be less and less ability to get Bitcoin because it's such a fixed asset. And it's going to be harder and harder because of the supply. And this is the basis of what Plan B represents in his stock to flow ratio. If you've not seen this is a theoretical versus an actual of where we're at as far as the stock to flow. And every halving, you see the halving was happening in late 2020. You see the prices versus the stock to flow tends to track this chart very well. So it tends to overextend and then settles down and basically lives on the white line for a little while. And then as the halving happens again, it starts to follow up. That's where we're at right now. That's why a lot of people are saying that we're going to be over 100,000 before the end of 2021. And we may overshoot it. We don't know, because the difference between 100,000 and a million on a log scale here is significant in a lot of pocketbooks. So could it hit 250? Could it hit 400? We don't know yet. But this is by Plan B, which is his Twitter handle is 100 trillion USD. He's been publishing this a lot. A lot of people like this metric and track it reasonably well because it tends to play out over time. So charting and trying to find price targets for Bitcoin can be rather difficult. So we're going to start with both the trading view and also the rainbow chart. I like to share the rainbow chart because it gives a long-term perspective of Bitcoin. So Bitcoin, if you look at it on a logarithmic scale, easy for me to say, it moves in decades. So this chart goes from 10 to 100 to every other line is what they call a decade. So you have 100,000, 10,000, 100,000, because it's much easier to see bigger numbers and smaller numbers on one chart if you go to this type of scale. So what they've done is they plotted Bitcoin since 2012 all the way out to the present day and overlaid this in this arcing pattern with a rainbow. And the rainbow color basically tells you, not financial advice, but basically where we're possibly in a bubble or in a time that you might want to cash out, to what they call a fire sale, or maybe you want to invest and get in. So trending in history, when it gets to the darker orange or red, it might be time to take profits, and that seemed to be in 2014 and also at the peak at the end of 2017. Whereas when it the dip in the blue, time to get in. So this kind of gives you a nice perspective if you zoom way out, and you can see where we are. And right now we're in the yellow, which is the middle band of all 5. And it says HODL because we don't know all 9 colors, because we don't know if we're heading up or down. If you go back in history, you could see yellow, it's gone down after that, or yellow, it's going up. It really depends. We could be in a pattern like this. The other things that can be indicative of where we're at is these lines called the halvings. The halvings are every 4 years, and that's where the block rewards for the miners are cut in half. Originally, they gave out 50 Bitcoin for every block. Then they went to 25, 12.5, and now 6.25. So if you look at this pattern, and again, we only have a few data points of history with 3 halvings, but the halving happens about when it's blue, and then it heads up into the orange and red area, might pull back a little bit, and then heads up strongly thereafter. That happened in 2013 to 2014, happened in 2017 to 2018. Then it could be on that pattern as well. If that were to happen, you could see that the dark red is almost $200,000 right now if we were to target January 27th, 2022. Again, these are European dates, so that the day is written first. So right now, if it happened in December or even in November, we're looking at 177 to 185,000 if we get to that point. That kind of lines up with the stock to flow model of Plan B, where he said $100,000 to $200,000 is a possible target, as the stock to flow model shows that Bitcoin could be going upwards significantly about 18 to 24 months after the halving, because the supply shortage really kicks in at that point. So we're in the yellow area. We think it could be going up.
How could it be going up, or what price targets do we have in the short term? That's where you start to look at you have to zoom in now. So now we're going to go over the trading view, take a look at where we're at today, and we're going to zoom in. Scale's a little bit off right now, but we're going to zoom in. We're going to take a look at the weekly viewpoint for the last year or so. And what let me slide over here. So here's the viewpoint going back to, thank you, Trading View. Going back to, say, last summer to fall. And you could see that we had a big run up starting in October all the way to April. So what I like to do is use a tool called Fibonacci retracements and Elliot wave theory. So those two things combined can kind of give me an idea of where we may be heading as far as next price targets. So the first thing you'd like to look at to see how we are as far as an Elliott wave. A typical Elliott wave pattern will be that there's a 5-wave pattern. And the first wave is a strong move up, and then wave 2 is a pullback to about 50%. And 50% here, we've pulled back into this light green area. That's these two zones here for a Fibonacci retracement tell you about the 50% line, give or take. And that's about where we hit in July. So what I like to do then is add a second Fibonacci retracement chart, and I start again at the top, but I only come down to the bottom of what I believe is wave 2. So now the typical targets that you're going to set are, the conservative number is 1.6 in the extension, all the way up to a 2.6. You ignore the first chart now. We don't really need this one anymore. So for simplicity, I'll remove that. So here's wave 2, and then wave 2 is going to hit a target of between 1.6, draw a horizontal line, please, thank you, or 2.6 on the extension. So that's the typical way an Elliott wave pattern will go out. So change the color of that so we can talk about it. So the blue line sets a target around 77,000. That seems rather attainable, achievable, considering we've hit the high 60s. I think we've hit 69,000 already. So 77,000 is certainly a reasonable target. The next one is a 2.6. Is about 105 to 106,000 of a target. I would conservatively say that we're probably looking at the 100,000 line from a psychological standpoint. A lot of people will say 100,000 yay and cash out. So I think that timelines are difficult to predict, but going back to the rainbow chart, 100,000 seems reasonable. 100,000 in end of this year will put us in the orange territory, which is only 1 or 2 zones up. So I think 100,000 or higher is reasonable. So and these can extend beyond the 2.6. So you can get all the way up to a 3.6 or a 4.6. And if that's, it's very hard to predict parabolic moves. So the 4.2 doesn't go to 4.6 on this chart. It's about 150. It'd probably go up to about 160. So could it get to 160? Sure, but you may want to think about, not financial advice, of course, it's never financial advice, but you may want to think about psychologically what people will do at 100,000, and if you want to start taking profits or taking a little bit of profit, maybe somewhere in the 90s, not a bad idea. So that's a look at the charts, and the rainbow chart is something to keep in the back of your mind as a reference. So keep an idea, and I'm going to bookmark that, blockchaincenter.net, Bitcoin rainbow chart.
So there's the news and the charting on Bitcoin. Again, it's the top brand name. If you're just starting out, not financial advice as always, but I tell people if I would go back in time to when I just started, I would say buy Bitcoin for a period of time, could be 3 to 6 months, dollar cost average in it. That means putting a set amount into it every week or every so often, every month, whatever you want to do. And then take that time to learn and educate yourself. Watch videos like mine or the channels, educate yourself about the space, learn about other projects and coins that might be of interest to you, but hold off on joining those projects until the end of that period, because at that point, you're going to really be much more educated and ready to make important educated decisions as to what projects you want to get in besides Bitcoin. So again, I like Bitcoin a lot. You have to like it in the space. The upward trend is very strong. And if you have any doubt, zoom out. In other words, like if the chart's not telling you or you don't know which way it's going to go, zoom back, look at the big picture, look at things like the rainbow chart, which I'm sharing, and you can see that this general trend is up.
It's just a matter of time. So with all that said, I'm going to close the drawer on the bureau, and I'll see you next time.